Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us again here at Ausbiz. So let's get across what happened overnight. Well, plenty of action as you would expect. Global equity markets rallying in response to the 2-week ceasefire between the United States and Iran, while oil prices remain below the $100 barrel level, having plummeted earlier. Well, the European Stock 600 index rose almost 4%, while MSCI's World Index was up over 3%. It was risk on for investors on Wall Street, with the major stock indices surging. The S&P 500 jumping above its 200-day moving average, while the Dow registered its largest percentage gain in a year. The SIBO Market Volatility Index dipping to its lowest level since the beginning of the conflict. Sectors that have suffered since the war bounced back. That included the airlines, with Delta gaining despite a disappointing second quarter profit forecast and declining to update its annual outlook due to uncertainties related to the war. Shares of Southwest and United also took off, and cruise operator Carnival surged along with Norwegian Cruise Lines, as did other travel-related stocks. Shares of the oil majors slid as crude prices tumbled, while gold and silver miners jumped higher, tracking precious metal prices. And US-listed shares of BHP and Rio were boosted by copper prices. In the tech space, Meta rose after released an AI model known as Muse Spark, and Amazon and Alphabet also gaining, along with Nvidia and Apple, while Tesla slipped. And Levi Strauss shares surged after the apparel maker raised its annual sales and profit forecasts. Well, Iran and the United States have put forward contrasting agendas for talks aimed at finding a lasting peace in the region. The talks are due to take place in Pakistan on Saturday and will be led by US Vice President J.D. Vance and Iran's Parliament Speaker Mohammad Khalibaf. Iranian officials have questioned whether the ceasefire could hold because they say it's being undermined by Israel's continued attacks on Lebanon as it targets the Iran-aligned militia Hezbollah. Israel pounded Lebanon with its heaviest strikes yet overnight, killing hundreds of people and drawing a threat of retaliation from Iran. Meanwhile, in the US, minutes from the Federal Reserve's March meeting showed most policymakers were worried that a protracted war could hurt the labour market and would warrant lower interest rates, yet also noting the risk to inflation that might ultimately warrant rate increases. Well, US Treasury yields initially fell following the ceasefire, but then rose on the possibility of violations. The US 2-year yield at 3.79, the 10-year was around 4.29%. The Australian 3-year government bond yields rose to 4.63%, the 10-year at 4.97%. The US dollar slumping, wiping out most of its gains of the year. The Aussie dollar rising to 70.4 US cents. Well, oil prices have plummeted, with Brent down 17%, while natural gas futures posted their biggest decline in more than 2 years, down around 20%. Traders are speculating on how quickly trade through the Strait of Hormuz can resume, with the world rapidly running down supply buffers to offset the loss of around 1/5 of oil and gas output. Shipping sources said the Iranian Navy continues to threaten ships attempting to pass through the strait without Iran's permission, and that transit remains shut. Well, Brent crude futures settling about 13% lower at $95 a barrel, or close to 96. West Texas Intermediate crude, that was down 16% to $94 a barrel. Gold has climbed to a 3-week peak. Spot gold up to around $4,725 an ounce. Copper was up more than 3%. Iron ore, that'll change to $109 US a ton, and Bitcoin is up at close to, well, just above 71,000 US dollars. So let's get an interpretation of what's going on in markets at the moment. Ira Epstein joining us from Linn and Associates. Ira, welcome back. Of course, big news over the past 24 hours, that relief rally that we've seen, but is this based on a very fragile ceasefire? How cautious do you need to be?
I think you're being courteous when you use the word fragile. That's number one, and thank you for having me. Here's the issue. What did they all agree to? If you look at the differences today, the Iranians are saying that they have never agreed to give up uranium enrichment. Our president is saying that he's looks like a deal's there for the Iranians and the Americans together to go in and dig out the uranium and take it out. That is not what the Iranians agreed to. I believe them on that. I don't know where our president's coming up with that part. Number two, I don't see any ships going through the Strait of Hormuz. So the political pressure, the world pressure, was on President Trump to get something done and find an off-ramp. I believe with my heart and soul, he was ready to bomb the power plants and he was going to take out the bridges. I believe that it would be surgical. It would be done. You saw the people of Iran. The government was lining up people around the power plants so that if the U.S. hit them, they would die. And then the world would look at genocide and whatever they'd want to call it. That game is not over. Nothing has been agreed to. Now Iran wants to be able to put on a tariff, if you will, on oil going through the Strait of Hormuz. The last I looked, they don't own that strait. That strait is a world strait. There's other countries on the other side of it. Maybe they can tariff those islands that are right there that are close to their shoreline, but certainly not the strait. And suddenly, even President Trump is going, well, they might be able to do that. And how will they get the money? They're going to charge either by a gallon, a barrel, I don't know which way they're going to do it, but using cryptocurrency, because they know they would be shut off on this SWIFT system and not able to do anything there. So what everybody's doing, and please understand this, is we got a free look today as to what it would look like if they're able to resolve all these differences immediately. You have a 2-week period to get it done. Nobody said it can't extend longer than that, 2 weeks. I don't know that it can't. Why not? But if you think you have a deal, you have no deal. You have the makings of confusion to get to a deal, and that's all that I think you have. And I think the rallies today were used by the smart people to dump positions in stocks that soared.
Yeah, because I mean, you could argue that strategically Iran has actually emerged in a stronger position given its control over the Strait of Hormuz.
And we're saying that to them. If our president is saying, well, we might be able to work out a deal where they're doing the tariffs, what has he accomplished with this? He's not getting the uranium out of Iran. He's not gotten them to say in any manner they're willing to give up enrichment. In fact, the opposite. They have been adamant they're not giving up that. And so we don't get the oil. We don't get that. What did the president get us into if he's not going to follow through? So it's up to Iran right now. They're playing their cards, and they look to me the stronger of the two hands. They're just saying no to everything, and they're doing no, and they're not getting hit by America.
So, Ira, as you pointed out, that huge gulf between the US and Iran in terms of demands looks very hard to close at this point. So, as an investor, also a trader, I mean, what should you be doing? Would you be buying here? I mean, we saw obviously that rally, but just how cautious would you be?
All right. On this show, I said for the past several weeks that you should be buying little bits of stocks, up to 5% of things you want to own, and you'll probably get a shot at taking some money, some good money off the table. I believe that I gave that information, and I know what I told my traders on some of it last night. We had been doing certain things when momentum was lost. I followed the slow stochastics very, very diligently, and you lost the bearish momentum, which often means as a technician, you go back to a key technical point. It's often the closest main moving average, be it the 18, the 50, the 100, or 200. You did that today. And I think the smart money came out there. And for those markets that were over those averages, you went to the Bollinger Bands, and 95% of the time you stop at a Bollinger Band top or bottom. And that's what I think happened. So I think today was a liquidation day to get yourself back in a position to buy the break again, following the same advice that I said before. And that's where I'm coming from. I think it's a trader's market, not an investor's market. We know the rotation. We've seen the big money wants to rotate back to tech stocks. We're watching Intel go up again. We're watching big names go, but some of them aren't. Palantir took a 7% dump today. So there are things that are not all that good out there. But where are we if we're going to be fighting again Sunday night? I wouldn't be surprised. I don't expect the U.S. to do anything until they get to that meeting on Saturday in Islamabad. And if they walk out of that meeting and they go, we are as far apart as we ever were, I expect us to be attacking Sunday night.
Ira, how would you be trading commodities at the moment, in particular energy and gold?
Well, the gold market today told you the story. If we're out of the woods with the Iran situation, gold's going to rally. Gold then has got the weaker dollar coming at it. The dollar's up because of the war premium. You have to be concerned that you didn't see the bonds and the notes really come down in yields. They held on. And if they're holding on, they're telling you that the government's looking at this inflation story, be it our government and then our Federal Reserve as well, which is not a government, but an independent body, if you will. And the Fed said today, if this goes on, they're thinking of they have to maybe raise interest rates. It's going to be hard to break interest rates. On the other hand, the market wants euphoria. It wants this done with. They want to buy copper. They want to buy silver. Silver was a stellar performer, up $5 an ounce today.
And just
and it's
quickly,
lost $4 tonight. It's $4 lower tonight.
Indeed. Just quickly then, energy, in particular oil, how would you be trading?
I don't want to be short.
Yeah.
The market, I don't think, is going to go down very much. I think that no matter what happens, you're a long way off from getting anything through the strait. You're a long way off from getting it to where it has to be, refineries. Iran is still hitting the pipeline in Saudi Arabia. They did it today. It wasn't major damage, thank God, but it was still damage. So no, you can drop here like you did $15, $20 in a day. You might go back in the Brent to 80s, but that's about it. I think the market's going to find a bottom there. So I'd rather wait for the break in the market to be a buyer because the demand is going to support it and they don't have the supply coming forth.
Ira, always terrific to touch base. Thanks for joining us from Linn & Associates.
Thanks for having me.
Let's refocus then on the local open. A couple of minutes until we do that, and we are looking to just take a bit off what we saw, those stellar gains yesterday at the relief rally as things got going soon after the announcement of that ceasefire between Iran and the United States. So S&P ASX 200 futures there off around 0.25%. Join us for the open in just a moment.